So I want you to picture this. You're on a beach here in Mexico. It's really nice outside. You're having a great time. You're sipping on a pina colada. And it's all that much sweeter because you realize that this was an all expenses paid for vacation because you knew what credit card to use, how to utilize your credit, and how to build this credit score in order to maximize your rewards and take advantage of this to have this sweet vacation in Mexico. Now, before we jump into it, we want to understand, why is credit important to people? And aside from a vacation in Mexico on a beach, what things does this really affect? We want to talk about owning a home. Most people can't buy a home outright. If it costs, $500,000+, that's not what the average person has in the bank at any given time. If you want to own your dream car, being able to purchase this dream car might not be something you could do with cash on hand. Again, buying on credit. And finally, being able to own your own business and being able to start this up by taking out a loan to eventually be able to pay off this loan and have the business make money for you as a result of making a proper decision in borrowing this money to make this happen. In order to understand the aspects of what good credit is and how to maintain this credit, you have to understand the different factors that go into a credit score. Now, the first three here on this page, payment history, credit usage, and credit age, are the most important. Total accounts and hard inquiries I'll go into as more secondary factors. Payment history, like it sounds, is pretty much the amount of money that you paid in the past to the credit cards that you are owning, as well as being able to pay off the loans that you've taken out, and making sure that you've made these payments on time. That's the most critical thing with understanding how to maintain your credit and how to have a good credit score. Even just one, single incident where you happen to forget to pay off your credit card, that mark can be absolutely permanent and affect your credit score for almost the rest of your life. So making sure that you make these payments on time, as you can read anywhere, from the articles on Forbes, as well as the research that I did on different articles from CNBC, as well as different credit bureaus, some of these credit marks never come off your record. Moving on to credit usage, you want to make sure that of your total limit, this includes all the loans that you have out, as well as all of the credit cards that you own. You want to make sure that you're well within that limit. So using up to 50% of your total credit limit might not be the best idea. You want to shoot for around 10% or lower in order to maintain that low credit utilization that shows lenders that you're able to take these loans out and are able to use this credit wisely and not overspend. Credit age. This is something that a lot of people, including myself, I'm only being 22 years old, something you can't really control too much, is the age of your oldest account, as well as the average age of the accounts that you have. This is something that, as you grow older, obviously will naturally increase your score. Total accounts is something where it includes both, like I mentioned before, the loans that you might have out for example, your mortgage for your house. It includes the mortgage for your house, includes car loans, student loans, as well as credit cards and other types of credit you're using from lenders. The more you have, the better. But again, these are all open accounts. And again, this is also a secondary level of a factor that credit bureaus focus on. For hard inquiries, this is something that I put at the bottom because it's something that actually comes off your record after 1 to 2 years, according to TransUnion, which is one of the two major credit bureaus that do the rating for people's credit scores. In just about 2 years, roughly, these hard inquiries come off your account. You're probably thinking, what is a hard inquiry? A hard inquiry, or a hard pull, as some people call it, is when a credit or a lender rather takes a look into your credit history by pulling a report from the credit bureau. And so what this does is tells them that you're actively shopping for a loan. And so they group these together into a certain time period where you're given some slack and you're able to look for loans within a certain time period. But once you're outside of this 2 to 3 month span, you don't want to keep looking for loans and keep applying to credit cards. One part of having hard inquiries is if you're denied for a credit card that you didn't have the credit score for, that can negatively impact your score as well. And on the next page, we're going to be talking about how to avoid, applying for a credit card that, you might not be able to get approved for. So here I've listed 3 example credit cards, all of which I've pulled from nerdwallet.com, like a pretty reputable, I would say, kind of rating, FICO rating agency for, not agency, like a company that does reviews for credit cards and basically ranks what scores people have had and the success rate on what they've gotten for credit cards, whether it's been approvals or denials. So here, starting on the left, you'll see that there's the Discover It card. It's a great card for anyone starting out, trying to have a new card on their credit history, as well as anyone that hasn't had a credit card before. I think that was my first credit card. It's a great card to have. 650 plus FICO is the score recommendation that they had, but I will say that if you haven't had credit before, they will probably be able to approve you for it. There's a $0 annual fee, which is great, and they provide 1 to 5% cash back depending on whether or not you're in one of the, if you're shopping for groceries, if they have a 3-month kind of checklist of items that they give you extra cash back for. If you're in that 5% category, then you'll get it back for that month. And after the first year, they match all of the cash back that you've gotten in that first year, which is great. Now, these second 2 cards, you'll notice they have an annual fee. I'm going to explain quickly what the benefits of having these cards would be, even though it seems that, why would I want to pay for a credit card when I'm borrowing money from somebody and having to pay for that, right? So obviously you also see the higher FICO score recommendations here. Now, the 2 times points on all purchases, as well as the 3 times points on all travel and dining points, those are 2 areas where you're able to make back that $95 annual fee and that $500 annual fee quickly. Especially with this Sapphire Reserve card, that $300 annual travel credit is something that you're able to use the card for, as well as be able to cash out on getting the rewards on travel when you use that. So, for example, if I'm going to call an Uber, right, and it costs $50, so you're getting 3 times points on that $50 Uber ride, as well as having it paid for if you haven't already utilized your entire $300 annual travel credit. So that, in a nutshell, is kind of the benefits of having a card that you actually have to pay for. And also here you'll see, TSA pre-check. You're able to, redeem your travel points on different airlines for an even higher rate. Again, more benefits you can get out of your cards. And basically, accumulating these rewards is how you're able to realize, that dream of having that vacation that all expenses paid for, trip to, a beach in Mexico, wherever it might be. So, in conclusion, we want to bring it right back to, what we're really talking about here. And it's being able to take advantage of these rates that are offered by, lending companies, and understanding the ways that credit can be beneficial to you. As I mentioned before, being able to buy a house, purchasing your dream car, or starting a business, all definitely great reasons to use credit, and making sure you understand these different factors of what goes into a credit score is absolutely paramount to being able to maintain that score and realizing these dreams.